welcome back. Well, Dave, here we are in the trading pit at Stockholders Restaurant in South Weymouth, Massachusetts. And again, before we get to the great steaks and the 2.5-pound stuffed lobster, why don't we do something we call trending topics and get some business out of the way? What do you think?
Let's get to it.
All right. Well, Dave, I have to ask you, the market has hit almost a high over the last 5 years. It seems like we've reached that point. I'm confused. Can you make hay of this? I mean, give me some sort of explanation of what's going on.
No, it's obviously the Fed has induced this, right? By keeping interest rates so low, Chuck, they're forcing people to sell the bonds and get into the stock market right now. I think we're overheated. I think the market is overextended. I know at the beginning of the week we gave some back. Again, I don't know about you, but does the economy feel like the market should be at an all-time high?
No, absolutely not. I mean, we had the GDP number that came out. That didn't look too good. As a matter of fact, that went down.
Yeah, contracted.
And then we have unemployment numbers still not anywhere near what we like to see. So all the indicators are, it shouldn't be like this. That scares me.
Yeah, and again, the individual investor, Main Street out there, they're chasing returns right now, Chuck. Again, you're earning nothing at the bank. They're trying to buy stock. I think they're getting it a bit too late.
All right, let's talk about what's happening at the bank. Interest rates are at a 1-year high.
Yeah.
Now, I thought the Feds, weren't they supposed to keep rates low through 2014? That's what they said.
Yeah.
Trust the government, right?
Well, we've talked about it too, right? It's artificial, right? Yeah. They're artificially trying to keep interest rates low. The problem is the market is bigger than that. The market's bigger than the Fed. People are selling the bond side of the market. Again, they're chasing the stock side of the market right now. That concerns me.
Well, Dave, the Super Bowl is now a week in our rearview mirror. Did you make any big bets, and then did you win those big bets?
I may have hypothetically won some money, Chuck. Yeah, good weekend, a great weekend for TV, right?
Well, you know who bet a lot and who has won? The NFL itself. I mean, that league is printing money hand over fist, it seems. Very successful business model. I mean, I do see some changes with the whole player safety concept moving forward in the next bunch of years, but still, with fantasy football, with gambling, with television viewership, it is on the fast track to making more money year after year.
No, I think what a lot of people forget, Chuck, is that the players have a short shelf life, right? 5 or 6 years to make all of that money. I think a lot of times we hear about them being overpaid and spoiled. And I'm looking forward to seeing what Derek has to say where it concerns them keeping the money that they earn.
Yeah, absolutely. And we're going to be joined by Derek Sanderson, who himself played in a professional sport, made a lot of money, lost a lot of money, and now counsels young athletes on how to be safe in protecting what they have, and managing risk, I guess, is the better way to put it. And it should be interesting. So why don't we do this? Why don't we take a short break? Be right back with more Money Matters in just a minute.
It starts with a goal. You know where you want to be in 20, 30 years. But how do you get there? Flagship Wealth Management can be your compass, guiding you through these challenging times, steering all your investments to the same destination. We are an independent advisory firm backed by the largest independent broker-dealer in the country. You can feel safe knowing our advisors have all the knowledge and tools to guide you to your goals. Flagship Wealth Management, helping you navigate your way to financial freedom.
This segment of Money Matters Boston is brought to you by SHP Financial.
Welcome back. Well, if you're from the New England area, then you are absolutely going to know who our next guest is. Former Bruin legend and hockey great Derek Sanderson joins me on the program. All right, Derek, I was reading this book, Crossing the Line. I got to tell you, I mean, it takes you on a roller coaster ride. I mean, anybody who knows you and your career knows that you've had your ups and downs, but I mean, you put it all out on the line here, literally crossing the line. Unbelievable story.
Well, it's a book about fear. It's a book about making mistakes. It's a book about forgiveness, redemption, friendship. It isn't like people, there are a lot of funny stories in it.
Oh, yeah, absolutely.
There's a lot of great stories in it, but when people look at it, they have to, it's how did you screw up so badly, and then how did you get out of it? If it wasn't for friendship and family, I probably would be dead. It certainly should be in jail.
Well, ultimately, it's a story about redemption because you're here today and you're able to tell your story and reflect back on it. Do you have any regrets? Anything that you could have done differently in your...
No, I don't think I'd be the person today if I look back on it and said I would do this differently. Sure, would I, blow the money? No, I would not. I would give it to you or give it to, Bay State Wealth Management. But I would give it to someone responsible and listen to what they have to say. That's what people who manage money do.
Yeah.
And I didn't. I just thought it would never end.
When I read this, you were at one point the highest paid athlete in the world, beating out Pele. And you know, at that time, I mean, it wasn't as though it was just a slight increase. I mean, it was a massive pay raise.
I was making $20,000, $25,000 playing with the Bruins. We won 2 Stanley Cups, and I wanted this humongous raise to like 80. They weren't going to give it to me. No, hell or high water, they weren't going to give it to me. So I happened to be a free agent, and Johnny McKenzie said, "Hey, listen to these guys in Philadelphia. They might have something." And they offered me $2.65 million, and I said, "Wow."
Yeah.
And I was stunned.
You got to take that. Yeah.
And the book will tell you how I tried to turn it down. Eventually, it did not work out, and I ended up taking it. But I did. I owed Mr. Adams, Weston Adams Sr., a lot. And my dad raised me to be loyal, and I owed it to him to bring it to him.
You got all this money, and then you lost it all. What happened there? I mean, bumper sticker version, I know it's a lot of little things.
To do it quickly, I think, well, the first day I bought a Rolls Royce. Not an intelligent thing to do. I was taken advantage of because I was afraid to ask where my money was or what they were doing with it. There were some people had control over it, and they did what they did. And you don't think it's ever going to end. You think it looks like a telephone number.
Yeah.
That's 7 figures. I never dreamed I'd even make 5 figures.
Right.
And life can get you. Once you get into that rut, when you look at 30 and 30 and the athletes, Allen Iverson lost $200 million.
Yep, I know.
How can you do that?
Yeah.
Well, I can't say that because I do.
You're right. And you know, one of the things too that people will obviously add some blame towards is drug and alcohol abuse and how that affected your life. Do you think that was sort of just another cross to bear in your life, or did it have an impact on how quickly you went through your money?
Well, it had an impact. Obviously, it does. Alcoholism is a terrible disease, and once you have it for life. There's no cure. Abstinence is the only cure. And to get sober, you have to let go, let God turn your life over. And some major things a lot of people have problems with and they can't come to grips with. But I was very, very fortunate. After my 13th detox, I met a guy that knew what he was talking about. And I listened, and I got better. Grace of God.
How important was it with your teammates, and Bobby Orr especially, in your recovery and in your ability to stay alive? I mean, those guys, you win the Stanley Cup, you must create some enormous, incredible bonds.
Yeah.
But how are those friendships today, and how did they get you through what you went through?
We were a very close team, and I knew Bobby Orr since he was 14, and Bobby's a very character guy. About everyone who talks about this is a nice guy, I don't want to name names,
sure,
but there's no superstar ever as good and as solid off the ice as Bobby Orr was. And he doesn't judge, but if you ask him for help, then there's some rules. And he's the best, salt of the earth. He's the best. And my mom and dad were great. I had 2 of the greatest parents that any boy could have. And it's just, they stuck with me. Esposito stuck with me. My other teammates did. Harry Sinden did. So there was a lot of good people, but Bobby was the cornerstone, the key to the whole thing.
Now, the issues that you had with finance, with drugs and alcohol, are compounded by the fact that you're one of the most famous people on the planet and you're on the Boston Bruins, you win the Stanley Cup. But these are issues that people face every day all over the place, nothing new. And you talked about in this book how it's really about fear and how you handle fear. What's the lesson that the guy who is battling these demons, putting in a 60-hour work week, trying to get through, what's the message for him?
Fear to you is not fear to me. Fear is what controls us. Fear is God's way of keeping you tentative about something that will harm you. That's a little pit of the stomach. Shouldn't do this. It's dangerous. You get that. You get it before you play. You've got to watch out. And when all you use alcohol for is to suppress feelings and emotions, it's its sole purpose. And then once you do, you're just dumb. You're just stupid. And then you want what you want when you want it. Alcohol has a way of making us very selfish.
All right, we're going to take a quick break. We're going to be right back with more of Derek Sanderson and be joined by Derek Gregoire from SHP Financial. Hang with us.
Peace of mind. Everyone wants it. Few people find it in today's uncertain economic times. Ross Mortgage understands that finding the right mortgage can be stressful. That's why we created programs like Custom Closing to save you time and give you the peace of mind so you can concentrate on the things that matter the most to you and your family. We'll walk you through every step to assure satisfaction. You can be confident that we'll close your loan on time, every time, guaranteed.
Ross Mortgage. Allow us to show you the way home.
Are your investments in CDs and money markets returning less than you expected? There is a better way. Get a structured settlement transfer from SHP Financial and start earning better rates right away. Learn more by calling SHP Financial at 508-591-5070, and we will send you a free buyer's guide on this exclusive opportunity. Call now and you will be added to our email newsletter, where actual cases on the market currently are sent to you instantly. SHP Financial, 508-591-5070.
This segment of Money Matters Boston is brought to you by Ross Mortgage Company.
Welcome back, and of course, Derek Sanderson joining me, the author of Crossing the Line, also the subject matter of the whole book, the outrageous story of a hockey original, and then Derek Gregoire from SHP Financial. And by the way, both names, Derek, did you know he was named after you?
Yeah, by Bay State Wealth. That's different. That's a great name. You know what it means?
It means, you told me, but I forget.
Derek. It's ruler of men, king-like. It's Gaelic, and my mother didn't think of that when she named me. She just didn't want my name to end in a Y.
Well, my dad and my mom thought of you, so there you go.
Well, as ruler of men, this will be a good time to lead into what you do, helping people really protect the money. And this comes in the context of a country right now that puts these athletes up on a pedestal. They're expected to do no wrong. They make enormous sums of money. And most often, you hear sob stories of people losing it. Antoine Walker loses a few $100 million. Allen Iverson. Yeah. And you must see it all the time. I mean, you happen to you.
Well, it happened to me. Hopefully, it doesn't. The guys that I've managed the money, and I don't manage it. The professionals do. We have money managers for that. But the guys that in the sports group at Bay State Wealth Management there's a plan. Follow it. There's a discipline to it. You're the same. As long as we're honest and we're not looking to take advantage of you, then you got to stick with the profession.
And it's not as though, Derek, that we have athletes watching the show looking for the best financial advice. It really comes down to what the general public can learn from these mistakes that the athletes make, and you see it every day. People, no matter what sum, they might make bad decisions.
Of course, yeah. We get to the point where clients get to the point they're about to retire, and they have no plan in place. And that's a recipe for disaster. You have to have some trusted advisor that knows what they're doing, that can put a nice plan together for you. Especially, it might be different for you, Derek, but for us, it's usually more of income based. You have you're retiring. You're used to getting your monthly income from work. Now you've accumulated these assets. How do we shift that and properly set it up for an income that can pay out for the rest of your life? Again, you have to have a plan. So many people we sit down with are disorganized and have assets everywhere, and we try to put it together and formulate an idea, a plan and roadmap for their retirement.
And the analogy is here with sports in the sense that you never went into a game with no game plan. No. You never, the coach never just said, hey, just go do whatever it is that you want to do.
No, don't go out there and have fun. There's a way to play this game.
Right.
Let's do it. And it's the same as when you're dealing with people. I worked in retirement when I first got in the business for a while. And people aren't prepared to retire. They are prepared, they think financially, but they're not emotionally prepared, they're not. Exactly. So there's a lot of different things that come into that problem-solving scenario, and a professional will do you. Now you've got this lump, and you don't spend it tomorrow, but if you spend it too quickly, you're eroding principal. And once you start to erode principal, you have no compounding on the plus side.
What do you think the fear is? We talked about fear in your book. What do you think the fear is for the average person to reach out for that help?
I was gonna kind of go a different way with it, Chuck. A lot of people too, even when they retire, we're trying to focus them on the income and distribution phase of their life, and they're still kind of in that accumulation phase. It's hard to get that psyche switch to, listen, they're still saving. They're still trying to save because they're so used to it. And we're trying to shift them, okay, you don't have to save anymore. Now it's time to use the money you have and pay it back to you and make sure it lasts.
Well, when that paycheck stops, oftentimes
it's a whole different world.
It's a whole different world.
Exactly. It's a scary thing psychologically, and obviously I don't can't tell firsthand, but I've dealt with many clients going through that transition.
Yeah.
And whether it's an athlete at 30 when their income stops, or or a retired person at 66, it's a very different psyche and psychological switch you have to go through to make that transition.
You know, with all the negativity that's out there, people tend to, you know, go into their cocoon or put their head in the sand, and does that prevent them from getting help?
Well, I think you look at people who are afraid. The market used to be the fail-safe. Now the market, all of a sudden, insurance was the key. It went down, this got hit, that got hit. But the professionals rebounded. They came back. It's still the professional, the one that does it for a living. Don't be afraid. It is a scary time.
Yeah.
Real estate will come back, as it always does. I mean, buy and hold philosophy is not in vogue right now. But, you know, valuation is, and it's different, and ETFs. There's different ways to manage money that people have to go out and get educated.
Exactly. There's so much money that we see on the sideline. People are paralyzed by the market and by the negative press that's put out there. But there's still, like Derek said, there's still ways to go about it and earn interest and preserve your assets and set up things the right way.
Derek, you know, I want to thank you for coming on the program. The book is called Crossing the Line. It's the outrageous story of a hockey original. I read this thing, I think 2 days I went through the whole thing. It was an amazing story. And Derek Gregoire can be reached at shpfinancial.com, and the website of your firm too is
Bay State Financial.
Bay State Financial and SHP Financial. Really get the help. I think look to you know, professionals to help you with that game plan. I think that's a good message going forward.
That's what you need.
Get a plan in place.
The Derricks, ladies and gentlemen, thanks so much. We'll take a short break, be right back with more Money Matters Boston in just a minute.
Peace of mind. Everyone wants it. Few people find it in today's uncertain economic times. Ross Mortgage understands that finding the right mortgage can be stressful. That's why we created programs like Custom Closing to save you time and give you the peace of mind so you can concentrate on the things that matter the most to you and your family. We'll walk you through every step to assure satisfaction. You can be confident that we'll close your loan on time, every time, guaranteed.
Ross Mortgage. Allow us to show you the way home.
This segment of Money Matters Boston is brought to you by Flagship Wealth Management.
Well, Dave, here we are in the trading pit at Stockholders Restaurant. Of all the places we go, I mean, how appropriate. It's the financial theme. The market's at an all-time, or a 5-year high, I should say, and they give us great food. It's a lot of fun to be here, isn't it?
Yeah, and again, they put us in here in the trading pit, not the Ponzi room. We have to thank Matt for that.
Yeah, we don't want to be in there. We have an exclusive arrangement with the trading pit here at Stockholders Restaurant. By the way, this guy used to wash dishes here a long time ago, so see if you work hard, what happens.
A successful Money Matters host.
And I do want to thank Eric Hines and all the people here at Stockholders for making us feel at home and welcome, and we had a lot of fun here. So you went down to Scituate, right, and talked to Crow Point Partners.
I did. You know, $1.1 billion under management, Chuck, right in our backyard. I call them the dream team. We had over 85 years of experience on their trading floor. Let me get right to it. We have Peter DiCaprio, portfolio manager, one of the principals. Welcome aboard. We've got Timothy O'Brien, same thing, portfolio manager and principal. Thanks for joining us. And Amit Chandra, portfolio manager and also a principal. You know, Peter, a bit of a background. You know, $1.1 billion under management. When I hear that, I think of Wall Street down in the financial district. What made you, what brought you down to Scituate?
Tim and I were together at Evergreen with Amit, and we both live in the area and decided that we'd be more productive spending time in the office than we would commuting an hour and 45 minutes into Boston every day. So it was a productivity issue more than anything else, and we just wanted to be, you know, closer to work.
On this show, we talk about rising interest rates and this bond bubble going on right now, but people are searching for yield, they're searching for income. What do you do here at Crow Point to get people that income that they're looking for?
We do primarily equity income strategies, which is, I think, feeding very well into the current environment. There's really no yield left on fixed income. There are still opportunities to get some pretty significant levels of dividend income. And what we try and focus on is maximizing equity income while managing risk.
All right, we keep talking about income. Am I correct in saying that the portfolios average roughly 6% in income?
Yeah, we specialize in an area that produces much higher dividend yields than the average dividend fund produces. So, you know, we're specialists in telecom, utilities, energy, and some subsectors of the financial markets. And those practice properly, you should get yourself north of 6% yields.
I just find that amazing. I'm used to hearing 2 to 3% on a dividend yield or a dividend type of mutual fund. How do you do it?
You go to places where other people don't go, and that's one of our specialties. Is we know a lot of names that aren't going to show up in the typical dividend income fund. You know, Tim's been doing this for 35 years. He likes to talk about treasurers that he grew up with that are now 25 years later CFOs of these companies. So we've known these companies for years. We stay within the same 300 universe of stocks. We've stayed within that same 300 universe of stocks since 1994. We know these companies well. There are opportunities and pockets of yield worldwide. You just have to know where to go.
I was going to say, Amit, you know, Peter just mentioned something about opportunities and themes. Give me some global themes that our viewers can look at now, maybe places that they should have their money invested.
You need to expand your boundaries a little bit. You go to companies that are not in the typical 50, 100, 200 names. And then you need to go beyond the developed markets. I mean, you know, there are, in some of the emerging economies, highest growth going on. And you have companies with strong history of strong, you know, cash generation, you know, 10, 20, 30 years of dividend and dividend growth. And so those are the companies that you look at, where you have good dividend yields, sustainability, and potential growth.
Right, now, Tim, we talked before the show about a sell discipline that you have here. Tell me a little bit about that.
Some of the reasons that we sell are the same reasons that any portfolio manager would sell, to manage a position size, just to reallocate capital. One thing that we do, which I think is different in terms of sell discipline, is that when we initiate a long position, any long position, we do that because we expect to make money in the name. And more often than not, we've been successful. Sometimes we're wrong. So the question we always ask ourselves when we initiate a position is, if I'm wrong on this stock, how much money am I prepared to lose? In our case, typically the stop level is around 20%, and that's because we typically run 50 positions in the portfolio, so our average position size is about 2%. We lose 20% in the name, that's a 40 basis point hit. You can manage your way around a 40 basis point hit. If you take an 80% loss in a 4% position, that's a 320 basis point hit. I don't know how to manage my way around a 320 basis point hit.
We talked before production about what really differentiates this team versus other teams out there on Wall Street. I want you to brag a little bit. Talk about this team for me, if you would.
Sure. I say frequently in presentations that we make to investors that there probably aren't 3 people in the country that have the deep knowledge base that Tim has in our sectors. And, you know, he tells a story about you know, more money has, what is it, more money has been lost?
More money's been lost chasing yield than was ever stolen at gunpoint.
So if you're going to buy dividend income stocks, you need to know these names inside and out, and we have a deep sector knowledge in 3 very important sectors of dividend income generation. So when you look at the investing landscape, you know, besides him, there's maybe 2 or 3 other people that can get you that kind of expertise.
Now, I'm honored. I truly believe this when I said this to initiate this. It's a dream team. And what I like about it, too, is that you're accessible. I mean, you're based out of Situate for whatever reason. You know, I'm glad I am personally, and our viewers are, too. Last but not least, can you give me an outlook on the market? I mean, we're bumping up a 5-year high. And maybe I'll ask each and every one of you, where do you think the market finishes at the end of the year? And does that affect this portfolio at all?
At some point, the economy is going to strengthen, job growth is going to accelerate, and the Fed is going to start withdrawing liquidity, and that's really the thing to watch out for.
So, Tim, obviously you're saying don't fight the Fed. You think the market will be higher by year end. Peter, what do you think?
The good news is we think the forward indicators are moving in favor of equities in Europe in particular, as well as the United States. So we're comfortable with the economic backdrop, and we're comfortable, obviously, owning equities, and we think equities.
Thanks again for joining us today, guys. Hey, stay tuned. There's more Money Matters coming your way in just a minute.
It starts with a goal. You know where you want to be in 20, 30 years. But how do you get there? Flagship Wealth Management can be your compass, guiding you through these challenging times, steering all your investments to the same destination. We are an independent advisory firm backed by the largest independent broker-dealer in the country. You can feel safe knowing our advisors have all the knowledge and tools to guide you to your goals. Flagship Wealth Management, helping you navigate your way to financial freedom.
Money Matters Boston would like to thank Stockholders Steakhouse in Weymouth, Massachusetts for hosting this week's episode. Stockholders is an urban-style steakhouse offering the highest quality cuts of USDA beef cooked to order on a custom oak-fired grill. Feast on the unbeatable center-cut filet mignon or the signature 24-ounce bone-in cowboy ribeye. You'll also find the freshest pasta in seafood dishes such as the enormous Warren Buffett 2-pound baked stuffed lobster, the jumbo pan-seared scallops, or the amazing surf and turf. For a power lunch, business meeting, casual dinner, or just a cocktail, Stockholder Steakhouse is the South Shore destination for you.
All right, we're back, and this is the part of the show that we call the hot seat, and we got a couple of hot seats here at Stockholders, and there's some hotter seats, I think, over by the bar where people are enjoying themselves, watching the game and watching us do our show.
We may get over there later.
I think we might. But let's get to the questions at hand, because that's what the hot seat is all about. Question number one, Dave, here it comes. Eric from Hanson. My company offers a match in our 401k program that is paid in company stock. How much should I hold in that position?
You know, Eric, we get this question a lot. Again, remember, you're depending on this company for your benefits, your salary, and now you're putting stock in here. Just make sure that it's not more than a 5% allocation. Keep an eye on it, and again, make sure again that you're diversifying out. You get this a lot, Chuck, where they're just continuing to match. They're forgetting about their 401k. And again, ask the people from Polaroid, Lehman Brothers, how they felt about their stock. So get proactive.
And get financially literate. I think a lot of people need to know what these programs consist of and who to talk to at their company if they do have questions.
Yeah, and again, there's windows, whether or not they can sell within earnings, before and after earnings. So again, get proactive. You don't want too much of your eggs in that one basket.
All right, next, this comes from Stan in Pepperell. His company is offering him either a lifetime pension or a lump sum option when he retires. How should he decide which is the best choice?
I think it all goes back to what your risk tolerance is and what you need in income. I prefer, and I don't think you are this way too, I want my clients to take control of that asset. So you've got an opportunity for a lump sum, and you can devise your own payment, your own pension plan. I prefer you have control of that asset versus giving up control to an insurance company.
Absolutely. All right, so we're cruising along here. Question number 3, this comes from Maria in Brookline. She has an adjustable rate mortgage with a very low interest rate. Should she keep this or lock in a fixed rate now?
You know, we talked about it in trending topics where interest rates are actually starting to go up because the market, stock market's going up. I think you lock in. I think rates are going to be historically low for the next 6 to 12 months. The Fed can only do so much, and eventually the market is going to dictate where interest rates go. I suggest you lock in now.
And Rob Gallagher from Ross Mortgage, who was on actually the last time we were here at Stockholders, did hint that he expected interest rates to go up, so it's still one of the best times throughout the history of the United States to get a low-rate mortgage.
I couldn't agree with you more.
Dave, what a great show. Another one in the books, thanks to Stockholders Restaurant in South Weymouth. They did a great job.
Yeah, and Crow Point Partners out of Scituate, same thing.
And we like to thank Derek Sanderson for coming by. Why don't we do this, do it all over again next week. Have a great one, everyone.